Hi, morning everyone. This is Rajendran here, joining from Bangalore, and welcome everyone to Option Oracle webinar. So this is a webinar on how to handle Option Oracle, and we'll be discussing about some of the features about Option Oracle, how to do analysis, how to understand the concepts like volatility cone, volatility smile, put call ratio, option pain, and other stuff, right? So before getting into the webinar, I just want a quick sound and video check before getting into the webinar so that we can go ahead. So is the audio and video quality is fine so that we can, okay, thanks everyone. And thanks for your time as well for spending your Saturdays with us. And Option Oracle is not a new software. It exists in the market for a very long time. It is built by a guy. I don't know his name, but I believe that his name is Samosky, because sometime back the website samosky.com he populating the software called Option Oracle. It's a free tool basically for the option players who want to play with option strategies like straddle or strangle, anaconda, butterfly, kind of stuff. But it also helps you monitoring the Greeks of the options, and it also helps you in building a portfolio of strategies, monitoring your trading strategies with respect to options, right? And previously people used to handle such stuff with Excel, and Option Oracle is a tool which sorted out those problems, right? So what happens now? The creator is not updating the software anymore. So eventually, at some point of time, the creator kept the code open source in the website, and now if anyone can download the code open source and they can start creating on top of it, right? So let me tell you where to get Option Oracle prior to getting into the webinar. So previously his website name was samosky.com. So right now he stopped updating his site, so nothing is there on the server. And now an Indian guy named Santosh Pasi. So you can Google Santosh Pasi blog, and you will be eventually landing in his blog spot, where this guy is constantly updating if there is any changes in the backend. So this guy is constantly updating the plugins for the Option Oracle, right? So this Option Oracle plugin is again free. You don't need to pay anything. Or if you are familiar with the .NET programming, oh, I'm sorry. I guess probably you'll not be able to see my screen. I guess now you should be able to see my screen, right? Right. Okay, let me reiterate back. So Option Oracle is a free tool where you can download you can monitor your own option strategies like butterfly, anaconda. You can monitor Greeks, like you can monitor the Greeks like delta, gamma, vega, theta, all those kind of stuff, and you can build the strategies on top of it, and you can monitor the payoff graph, the stuff like volatility cone, volatility smile, put call ratio, and option pain, right? And you can also create a portfolio of strategies, and you can monitor the portfolio of strategies in during the market hours as well. And it's a completely a free tool. Sometime back, this guy called Samosky. So Samosky is a creator. Sometime back, he started updating. I guess it's there in the market since 2008, if I'm not wrong. So at some point of time, the creator lose its interest, and he kept the complete code open source. And you can get the code open source at, let me search, Options Oracle source code, right? So source code probably will be landing in this link, Option Oracle link, SoundForge. There you can download those codes, right? So the code is completely open source, and this particular project is kept read only, so you can see the code and you can build on top of it. but you should be familiar about .NET to create if you want to update the Option Oracle blog. But one guy, Indian guy, is doing it. His name is Santosh Kumar Pasi. So you can see santoshkumarpasi.blog.com. He's regularly updating the plugins, NSE plugins, which frequently download the option chain, and it also downloads the Yahoo historical data, and it retrieves those data and put it into the Option Oracle in the required format, right? So he's constantly updating it. So you can go here and download the plugin. We can go down here and see, probably this is a recent plugin he updated, so that it displays the Bank Nifty weekly option contracts, right? So you can download over here. You can go to that page. The current version is NSE plugin version 1.85. You can download over here, and probably there are two versions here: faster version, slower version. In some systems, in some of your PCs, the faster version may not work. It may throw error. But in my case, I'm using Windows 10, so faster version is not working in my PC, so I downloaded the slower version, and it's working fine for me. So you have to follow the instruction. Just download the file, unzip it, and once you unzip it, you'll be getting an folder like this, and all you have to do is, just give me a second. Yeah, all you have to do is you have to just open the, no installation is required. You just open the Option Oracle .exe file, and this pops up. This pops up without any information, right? And if you want to if you want to retrieve Nifty options, you just type Nifty and press enter. So probably it takes a little time, and it takes a little time to download the option chain from NSE India website, and it also retrieves parallelly the historical open, high, low, close prices from Yahoo Finance, right? So it's taking time. So you have to wait a little patiently. Okay, here we go. It's done. So the retrieval is done. So what it done now, it retrieves all the NSE Nifty option contracts, all the strike prices, along. It also calculated the Greeks as well, right? So there is an option here to set whether you want to auto refresh or you want to do a manual refresh. If you want to do a manual refresh, you have to press manual refresh, or if you want to make it as an auto, you click it so that the timer runs on. I can see the timer running from 120 backwards. Means, I mean, almost every 2 minutes it keep on refreshing automatically. If you don't want, you just click on it so that the auto refresh mode will be disabled. If you want to do a manual refresh, you just click on the refresh button, right? And it displays all the option contract details. It displays all the option contract details, along with the bid ask price, volume, open interest, implied volatility, and the in the money margin, in the money probability, and along with the option Greeks as well. So option Greeks, it's optional. You can either disable it or enable it from here. There is a small toggle button here to disable and enable the option Greeks. And you can also see the underlying price as well. So the spot price, probably this spot price is retrieved from Yahoo Finance again, if I'm not wrong. But if you are a .NET coder, you can you can create your own stuff. You go through the code and create your own stuff, right? And probably if you're a .NET coder, it will be a child play to create your own option analysis tools. Probably you have to find a fine source, and you can even build it. You can bring it to a real-time mode as well, right? So and there is also an option to select a particular contract. So let's say I don't want all the contracts. Let me go with only near month contracts, right? So 30th June is the current month expiry. So I'm just selecting only 30th June. So the list automatically brings only the 30th June contracts. So let's say I want to filter even more. I don't want all the in the money, or at the money, and out of the money contracts. I just want to focus only on the let's say I want to focus only on the OTM contracts, out of the money contracts, right? So let me disable this, and only now OTM is enabled. You can see that it is highlighted with the blue color, right? And rest other things are in gray mode, means it is disabled, and it shows both calls and puts. Again, you can have a selection criteria to select only calls or only to puts, right? So let me select only puts here. So let me select puts here. So now it filters, what it filters now, it filters the only the 30th June contracts. It shows only the out of the money, and it shows only the OTM puts. So OTM puts, 30th July contracts, you have the complete list over here, right? So, and in case you want to enable all, you can select all here, and let me select all, so everything retains back. All the 30th June contracts are now in the picture. And once you install it, first you have to do is you have to do the configuration. The configuration is here as mentioned. You have to select the plugin here. By default, the plugin server India has to be selected, and you have to press OK, so that it listens to this particular plugin. So your it understands, the option oracle understands that now you have to listen only to the NSE Indian markets, right? So whereas if you want to develop for other markets, then probably you have to create your own plugin, right? Some of the plugins are mentioned here in the open source stuff. Like, let me go through that. Source code options, Oracle source code. Source code. Okay, so there is a forum here. They are also discussing in indie traders, right, about the source code. What does this code does? Where you have to create those symbols. All those things are discussed over here. Anyways, I'm not going much detail into the code now, right? So the core motive is to understand, make you understand about option oracle. Okay, let me option oracle source code. Probably, yeah, it's here. You can go to the code. So what I want to say you is, if you want to create for some other markets, you have to create your own DLL. Let's say you want to create for US markets or for European markets, you want to monitor the options. There is a plugin folder here. So this is for NSE, this is for retrieving NSE, and this is a plugin to retrieve, the source code to retrieve from interactive brokers. So interactive brokers, they have the source code here, and you can go through the source code and you can create your own DLL. Now final output is a DLL. You can let me go through this here. So you can see the OO server nsc.dll. This is what the plugin is called. So you have to create the compile the code and create the DLL and put it into the option oracle folder. Probably you will be able to select it under the configuration section. So the configuration section here, once your data is fed into it, it's ready to fetch the data from the options, from your source, right? So now let me try to create a very basic and simple strategy. So let me try to create some, let's say you want to monitor some straddle. Let's say you want to, you believe that you have a market belief that market is going to be range bound between 8,000 and 8,300 for this series, right? So let's try to build some short straddle, short strangle. To do this, you have to click on the add row. So it comes with some default options. So what I'm going to do now, I'm just going to short. So you have a bunch of options here. Under the type options, if I click on it, the drop down comes down here. I'll have a couple of options here. Now I want to short. Let's say I want to short 8,300 call, 8,300 call, 8,300 call. I can select the expiration. The expiration is current month series, and the quantity is 75. The quantity is 75, right? And you can see that the current pricing is around, the last traded price is 43.10, and the implied volatility is 16.1. And the margin here is not the standard margin, because the initial setting is somehow wrong here. So the default setting has to be changed to get the actual margin. The actual margin is your broker margin, which is nothing but shorting and one lot of Nifty futures, right? So probably the broker margin will be anywhere between 8% to 10%. So in my case, it is supposed to be an 8%. So let me set my margin here. To set the margin properly, you have to go to config, and probably you can see the margin setup over here, the margin tab. You can go down there, and you can go to, let's say you want to do an short naked call. There are a couple of settings here, right? So the margin is traditionally 8% of the underlying stock price. So 8% of the underlying stock price. Similarly, for shorting an naked put or a naked call, it is supposed to be an 8% of the margin. So this brings you the typical margin. So the typical margin comes around 84,490, right? And I'm also going to add, and I'm also going to short and put 8,000 put. Let me try to short a put here. So short put. So 8,000 here, and let me put the quantity as 75. So the one, it comes with the default value of 1, so it doesn't mean by one lot. So options oracle doesn't know what is the lot size. So you have to make option oracle to understand this is actual lot size, or this is the actual quantity you are willing to play. So now once you posted it, so short put, right? So short put, and you'll be getting an debit as well. Investment is showing, margin is showing somehow wrong. It's a short put. Let me check the configuration. Margin, short put. Put 8% of the underlying price. Reset the margin account. Config. Config 8% of the underlying price. Okay. And oh, short naked put 8%. Okay. And short naked and call is again 8%. Short naked put also 8%. Okay, we save it now. Somehow it's not taking up. Okay, even the long stock is supposed to be 8% of margin. Naked put. Okay, it's taking some minimum of the excised price or proceeds. So I don't know. Okay, let me go with that. So anyways, the investment has to be fixed. Some bug, it seems to be some bug over here, right? And parallelly, what you can do, you can monitor the delta, gamma, vega, and theta of the particular option strike price as well, right? So probably you can see that the short call, anyways, the delta will be negative, and the short put, the delta will be going to be positive. And for a delta, if you're a delta based trader, you can you can monitor the delta. So delta is nothing but the change in option price. Let's say, I mean, if the delta is 20 here, right? What does it mean? Like if there is a 100-point change in Nifty, right? So in the options, you'll be seeing an 20 points move in the premium, right? That's what it basically means, to be explaining in simple terms. And I'm not going to touch any option Greeks here in this tutorial. This is more of explaining how to handle options oracle, right? So once the strategy is built, you can see the strategy summary here, and you can see the payoff graph from the graph button. There is a small graph button over here. I can click over it. I can see how the straddle has been built and what it is going to give me, the what is the payoff it is supposed to be for this particular strategy, right? So probably you can see the range is very small, and you can do a zoom as well. You can click over the chart, select the region where you want to zoom, so that now it gives you a fair idea how the option strategy works. Now we can see that the short triangle, it has it has a maximum potential gain of around 7,038. You can see at the bottom of the tab. You can see at the bottom of the tab. You can see that 7,038 is the region, and the region is has two boundaries where you can see the maximum potential is there. The maximum potential is between, when the Nifty expires between 8,000 to 8,300, you'll be able to get a maximum benefit out of it, because you're shorting both 8,000 puts as well as 8,300 calls, right? Whereas the profitability declines and it goes to the zero here, means this is your break-even point. As long as market is not breaking 7,900 for this series, as long as the market is not breaking 8,401 for this series, you are going to get protected, and the profitability is ensured for this month. So generally, this is played by the most of the professional option players, and sometimes it has its own deep risk when the market is going to move faster within above, either above or below this boundary region, right? So, but here you are protected with a 500 points range. As long as the Nifty is going to maintain the 500 points range, you are going to be safe. Otherwise, if this strategy fits for the people who think the market is going to be range bound for this month, and even if there is some sort of volatility in the market and still the market is not going to break this region, then it's a safe strategy to play it, right? Otherwise, it's not a holy grail strategy to make money forever, right? And a lot of people burn their fingers. Even some of the top traders burn their fingers with trading and short strangle kind of strategy. So if you're doing this, try to have some market knowledge, and don't blindly go and bet on any sort of option strategies unless you understand the nature of the risk you are willing to take, right? So this is a payoff graph. The same payoff graph is explained here as well. So you can see, sorry, you can see here the same. You have a maximum profitability potential of 11.49%. It is not supposed to be 11.49%. Maybe it comes somewhere around 5%, or even 4 to 5%. I believe 5 to 6% somewhere. Because this particular calculation is not using the margin as an investment here. It's taking as a zero, right? So somewhere this has to be fixed. Anyways, it's a bug. Okay. And you can also have there is a small option here to invert colors. You can use a white background or a black background, and there is also some auto scaling features, right? Auto scaling features. You can zoom a little, and then you can see that particular zoom. As long as you just click with your mouse and then select the top region and the bottom region, and the particular image zooms up, so that you can see the payoff graph. And you can also take you can save the images as well. So you can right click over the charts. Let me auto scale it back. Let me select this region and let me zoom a little so that you can understand. So the scale is in terms of if this is 5 into 10 power 3 means 1000 into 1000, right? So this is 5,000, this is 10,000, and right click, save the image, and you can save it for your further studies. So you can save it in an EMF format or an PNG format. So generally PNG is a recommended format. You can save like short strangle, right? You can also build a straddle as well. So let me tell you how to build an straddle. Let's say now Nifty is at, let's say what is the price of Nifty now? 8170, right? You can see India. The price of Nifty is around 8170. You can also see the underlying price over here, 8170 here. If you think the market is going to break either 8300 or 8000 for the series, and you want to benefit out of it, then probably people try to use with strategies like long. They'll be using a long straddle. Like, let me go to. Let me try to build some long straddle. So they'll be buying long calls. Let's say 8,200, 8,200, and long put 8,200, 8,200. Okay, so let me see what is the payoff now. So let me select here. Okay, so my total investment is around 15,000 for one lot of long call and one lot of long put, right? And let me go through the payoff graph as well. So this is the long. This is how the long straddle is supposed to be. Let me zoom the straddle so that I can show you for 500 points here and there. And this strategy has a maximum loss of your maximum loss is nothing but losing the premiums of both long and puts. So you'll be losing a maximum of whatever your total investments, right? And but in case if you think like the market is going to be volatile, suddenly that could be a breakout on either side, and if the market is going to break either 8,000 or if the market is going to break the other side like 8,400, it is going to be more beneficial. This kind of strategy you can play. Let's say you're expecting an very bear. If your sentiment is very bearish, you are expecting the market to crash, or the market could crash either side. If your technical analysis studying, if your technical analysis study is saying that market could crash either side, but you don't know which side it is going to crash. But to play this kind of strategy, you can go with long straddle. Some people during expiry, they try to play with a short straddle as well. So short straddle during expiry, let's say the market is not going to go anywhere. This is going to expire around 8,200 only. So instead of going long, they on the same strike price, they'll try to short both long calls and short calls, right? And the payoff graph looks like this. So what does this mean? I'm sorry, one second now. Short, this is supposed to be short put, short put, short put. Okay, so shorting the call and shorting the put of the same strike price. It's short straddle. If you go to the payoff graph, so it looks like an inverted thing. Previously it was a V shape, now it was an inverted V shape. You can see here your maximum profit potential is like the option premium again going to zero is it's where your option you're getting all the premium collected to your account, right? So your maximum profit potential is 24% of your investment, and this generally people love to play during option expiry seasons, right? And you also protected on both the sides, 8,000 and 8,400. If the market is going to expire anywhere between 8,000 to 8,400 region, you're going to be profitable, and your maximum profit is going to be at the center. If the market expires exactly at 8,200, you're going to get beneficial, right? And you can also probably you cannot get the exact figures. You can get the exact figures by just scrolling over the mouse, and you can see the your profit and loss possibilities during expiry, right? But also there is a provision here. Once this strategy position has been built, right? Once the strategy position has been built, you can what you can do, you can go to analysis section. This analysis section talks about like let's say the market is going to expire between 8,000 to let's say 8,000 to 8,000 to let's say the market is likely to 8,400. Okay, and it tells you about profitability. Let's say the underlying step I put it as, make it as 25, so that every 25 points it will show you how your expiry, what will be your profit loss figures. It will be shown in that format, right? Anyways, the date is supposed to be, let's say, on this expiry is on 30th, right? So let me put the date as 30th. So 30th, autofill the table. So now you can see the profitability figure. When, let's say, if the Nifty is going to expire around 8,100, your profitability is going to be 7,526 rupees. That's approximately 12% of profitability for if it is going to when the Nifty is going to expire around 8,100, right? Likely you can also vary the date, and you can check for the different date as well. Let's say at 24th, what could be your profitability you can expect when the Nifty is going to be around 8,150, right? So you can expect your profitability around 4,236.28, right? Here, this particular problem assumes that the delta, gamma, theta, and vega is going to be the same, right? Whereas at the options on the expiry date, on the option expiry date, you can see that the gamma goes to 0, the theta goes to 0, and the vega goes to 0, right? And so all the theta, gamma, and vega are going to go to 0 on expiry date, right? So let me take some questions here. Once we are done with the questions, we can again go and get back into some of the concepts. Let me take some questions over here. Okay. Is there any video for basics of option trading? A lot of YouTube videos are there. You can go through those. You can go through those videos. I mean, you can start with option basics, like what is an intrinsic value, what is the time value, what are the option Greeks, right? You can start with that. Just Google it, you will be able to see a lot of option basic videos, right? So I don't want to teach any option basics, it's already there. So we don't want to reinvent any wheel here in the markets. So is there a way, so Hari asked, is there a way to add futures to our strategy in Options Oracle? In Options Oracle, they have an provision to add stocks as well. At this point of time, they don't have options to add futures, but you can add an underlying stock. This is supposed to be an spot price, right? So at this point of time, you can use instead of futures, you can use stock as a proxy. So I guess this answers your question, Mr. Hari. There is a question from Prasanna Manvi. Can we do backtesting using this tool? You can do live walk forward testing, like you can monitor your strategies, you can save it, and you can try to understand what is the profitability, what is the output. You can monitor that, but you cannot do real backtesting using this tool. Right? It's a simple tool which converts your Excel-based works. Previously, people used to do a lot of Excel-based stuff. They'll try to compute the delta, gamma, theta, all those stuff in Excel. So this is a simplified version of Excel, and you have all the facilities inbuilt to monitor and build your an option strategy, and to start monitoring your own option positions on your own, right? I guess that answers Prasanna Manvi's question. So he also asked whether this tool is a real-time tool. So to answer that, this tool fetches the data from NSE options, option chain page. So that option chain page is almost 2 minutes delayed. So we can expect a minute, 2 to 3 minutes of delay in this tool. So. But if you have any live markets, live market data, and you can integrate it on your own if you have some .NET knowledge, right? Can we plot implied volatility in option oracle tool? You cannot plot implied volatility in option oracle tool, Mr. Akshay. So you cannot plot. There is no provision at this point of time. Probably you can customize it in case if you want to customize it, or you can give it to some freelancer and you can get it done, right? So at this point of time, you cannot plot implied volatility. You cannot see any historical implied volatility for a particular price strike here, but you can monitor the current implied volatility figures. Can we get the strike price PCR? This is a question from Raju Mandal. Yes, you can get the strike wise PCR. There is a put call ratio of option here. Let me go to the put call of ratio option. Okay, so what you can see is the total open interest built up based upon a particular series. There is two ways you can build it. One is by expiration. So it shows by every expiry. For June expiry, what is the put call ratio? It doesn't give the figure, but it shows the numbers, right? You can have a fair idea. Let me zoom it, right? You can see for what is the June strike price, what is for August strike price, for December. For all the strike price and for all the expiry series, it shows the put call ratio. And there is also a selection mode, graph selection mode. By default, it comes with by expiration. You can also click on top of it and you can see the put call ratio across the strike price, right? So anyways, this is not an by default it shows all the strike price, but if you want to see only the limited you want to see only the limited zone, like let's say you want to see only from 7,000 strike price to 9,000, you can select those zones, and now you'll be able to see those only those particular strike price. Or you can even select only the 7,500 to 8,500, and you can monitor what is happening in those particular strike price zones. So now we can see that the 8,000 call, 8,000 put is being returned, and it has a higher open interest at this point of time, right? So you can monitor the put call ratio by an strike level, and also at the you can also monitor at the expiration level as well. By if I say if it is a strike level, it is supposed to plot only for that particular series, or probably an this particular level. I mean, 8,000 has the highest open interest built up. Whereas on the call side, you can also see that 8,300 and 500 are having the highest open interest for this series. Not for this series, probably it is showing for the entire strike price what is the options which is built over here. 8,300 and 500. So from this we can conclude that market is in some sort of a range bound mood. It may try to expire anywhere between 8,000 to 8,300 at this point of time. But again, this data is going to be very dynamic data, and if you want to predict the range of the market series, you need to have some fair idea about the market dynamics and underlying sentiment in the markets. So let me close this. So the put call ratio is done now. You can also invert colors, and you can save the image like how you done earlier, right? You can also save the image put call ratio, and you can send it to your friends or whoever you want to do. You want tweet or anything you can do with this, right? So PCR is done, and there is a question from Mr. Ananta Krishnan. His question is, can we get strike-wise PCR? Strike-wise PCR, I think it is not possible. So it's showing, this is strike-wise PCR, but it's not an strike as well as an expiry-wise PCR, if I'm not wrong. Right? It shows, if I say this 8,000 call, it includes all the expiry series probably, right? For strike-wise PCR, here you cannot get it anyways. You can get it as strike-wise PCR, but it includes all the expiry series. You can get an expiry-wise PCR. You can segregatedly see what is happening in the current month expiry and next month expiry, and if what is happening at the longer distance. Let's say you want to monitor a December 2016 series, right? December 2016, what is happening here, any actions happening or not, you can monitor it, right? And again, let me, there is a Greek calculator here. There is a Greek calculator here. So anyways, this Greek calculator is anyways, it's coming at the top. Anyways, it's not required, but still in case if you want to see, want to understand how the delta varies, how the gamma varies, how the theta varies, you can input all those pricing details over here, right? And the interest is nothing but our interest rate, normal interest rate, and volatility is nothing but the annualized volatility, and a dividend rate you can keep it as by default numbers. So option calculator is, anyways, if you want to understand how the delta varies with respect to the pricing, or how the gamma varies with respect to change in delta, if you want to monitor those things, or you want to, if you are a theta based trader, if you want to understand the time decay, the Greek calculator will help you to understand the basics, right? Apart from that, it doesn't going to help you much here. And okay, and the next question is from again from Ananta Krishnan. On the top of 19.37 historical IV percentage. Okay. Can you run the wizard? What can we do with that tool? Okay, let me click on the wizard. Okay, so what the wizard says, this strategy wizard provides you the ability to download one or more stock data and test built-in or customized strategies and all possible combinations, all stock and all options of each stock. Okay, let me try to put something like Nifty, Bank Nifty, right? So Nifty and Bank Nifty. Let me try to load it. Let me put the USDINR also, USDINR as well. Let me load it. Okay, and it's asking me to give a name. Okay, so multiple option legs. Okay, maybe here you have to feed those data in a text file probably. You have to put it in an so you have to enter stock symbol separated by commas. Let me save it. Yes. Multi-legged, multi-instruments. Next. Okay, so now I can set a different style of strategy. Let's say I'm going to select this. What I'm going to select. Let's say I'm going to select and what I can do now. Okay, let me put. I'm going to short call on 75 quantities, and what is it? Add another row. Short put 75. So this is I'm trying to do it for Nifty and Bank Nifty. And the second one, so let me try to add for Bank Nifty. Let's say long call, not long call. Let's say short call 18,000. Let's say I'm bearish on Bank Nifty. 30 is the size, right? So 30 and 30 here. And okay, so you want to put an stock price with a standard deviation, stock price, standard deviation, minus ST and plus ST. So here, what it does is it's something like an filter here. Let me go back. Okay, let me remove this USD now and give next. Or let me save it. Multi-leg instruments. You can select some. Okay, bullish long stock. This is also, let me put it as bullish long call. Put this as 75, 5, and second one I'll make it as 30. Let me go to next. Expiry date range. Expiry date range is on 30th June to, let's say, 25th August. So what are the strike price you want to filter out? So select those price range if you want to select it. Or if you want to select any option data filter, you can select those option data filter, and you can press next, right, and set up visa deltas. So you have a lot of filters to choose which strike price you want to choose, right? So this is a selection criteria to choose which option strike prices you want to choose. Let's say you want to choose a particular strike price with a given delta. Only in that case you want to execute that strategy. So you can use these filters to filter it down, right? So there are a lot of filter options over here. And finally, now you start download. This will start downloading both Nifty and Bank Nifty, and it will try to build the strategy on top of your criteria, right? So again, it's going to take a lot of time. So it will download for Nifty and Bank Nifty. It's taking more time. Okay, in the meantime, I'll try to answer a couple of questions. Okay, to answer Anjani Singh question, so Visa is a tool to filter out strategies and strike price. Which strike price you want with a given delta. It's more for an advanced option Greek traders, to be frank, right? And it gives you an way to filter and select your strike price. Let's say you want to trade a low theta stock, low theta with a high volatility kind of combinations. If you want such combinational criteria, then you can use this tool to filter out it. Instead of you doing it manually, you can filter out those stuff instead of looking into it visually and selecting. Looking into those criteria and looking into it manually, it's going to take a lot of time. So this will save you where you put some minimal effort, right? And once the download is done, let the download gets done. So we'll proceed it. I guess the download is done. Now let me start the analysis. So it's running the analysis. So it gives me a bunch of criteria. What are the things I can do? So it selects a couple of strategies for me as well here. So based upon my criteria, it is selecting a lot of strategy for me, like Nifty, the particular strike price. So what was the strike? It has a Nifty and Bank Nifty here. It has a Nifty and Bank Nifty combo over here. So total 124 combinations are available with my given criteria. Okay. Now you can go to the strategy table and you can monitor the payoff graph. Anyways, I mean, this is quite quite a long process. Let me again reiterate again. Probably some people might be not familiar about it again. Let me go through the wizard. First, you have to select the required strike price. Let's say you want to build a portfolio of strategy using Nifty and Bank Nifty, right? And let me go to next. Go to next. And now you have to build an options for 1 and 2 leg here. And let's say you want to go and you want to go for an not short strangle. That is a short strangle. Okay, I want to do a short strangle. Let's say let me put a criteria 75 here and again 75 here. So what is the strike rule? How to select the strike price? So strike price A of strike of A equal to expiration of A. Similarly, I'm just going to put an again another short strangle for B. For B, again let me put another short strangle. Short strangle. This is supposed to be 30 and 30. 30 and 30, right? In case you want to save, you can save the strategy. You can save the strategy, or you can create as a template and you can load the strategy whenever you want. And the end date is auto selection, or you can choose which end date when you are going to exit the strategies, or the investment size. It's supposed to be fixed quantities or fixed total. Once you're done with the settings, now you can again go to next level where you can select the expiry range. So let me say the expiry range is supposed to be only on this June only. Right? Let me put this June and July. June and July. Sorry, June and July expiry. And you want to select. Do you want to filter the criteria based upon in the money, out of the money, or underlying price strike? So at this point of time, I leave it open, and it should have a minimum open interest criteria. So whether it should have an open interest or not. Some stocks might be illiquid, so you can have an option filter to filter out that, and you can also filter based upon the implied volatility range. Say you don't want to short an ultra low implied volatility. So let's say if the implied volatility is less than 15, you don't want to take those stock, right? When you're shorting options, preferably you want a fair number of implied volatility, right? So low volatility may hurt the option position when you're especially shorting options. Let me go to next. So again, I'm not selecting any criteria over here. Let me go to next. And as of now, I'm not putting any the Greek filters over here. But in case if you want to put any Greek filters, you can put those Greek filters. Say like you want a total delta of total delta range between 30 and minus 30. You can filter out in that way. And press next. And again. There are a couple of option indicators as well here. Let me go through that again. But at this point of time, I'm just not going to use any filters, indicators. So again, let me start downloading it. So anyways, both the, let me go back again. So you can see here, download the data for stocks that are not in the local database. Previously, we had done the download, so now the data is in the local database. So if I click on that data download, it looks from the local database, and yes, the data is there. So it takes the data from the local machine, and now we can do the start analysis. So it runs the criteria. It looks into all the data factors, and it will try to correlate it, and it try to bring us the results. So there are 200 combinations in Nifty, and Bank Nifty again will have a similar set of combinations. It brings all the combinations to the front, and each and everything is an particular strategy. Let me check what is this strategy is for this Nifty strategy, right? So this is Nifty. So this is Nifty. Let me go to strategy table. So it brings the strategy table to the front. Okay, maybe it's not having enough. Let me scroll a little. Strategy table. Okay. Again, looks like a bug here. Maybe let me put Nifty over here anyways. Nifty. So let the download happens, and we'll try to select the criteria here. Let's see what's going to happen. Probably we should have some maximum profit potential criteria. So let's say this particular strike is having a maximum profit potential. Let me try to scan for Nifty. So Nifty, there's some maximum profit potential of 35,000. Okay, it's 35,482. Let me double click it. Oh, it's going on. I guess something is wrong over here. Okay. It's not allowing me to click on done. Okay, let me do start again. Anyways, Nifty Bank Nifty, click on next. Short triangle, both it's done. And click on next. Click on next. Next. Start download. It's already there on the machine. Start analysis. Okay, so what is the selected option position? Let me select and showing a very low strike price. Probably I should filter the criteria for the strike price as well. Like maybe we can do an strike price criteria as well. Let me go to wizard again and next. So let me select the strike rule. Stock price minus 1 SD. So I'll put on 1 SD strangle, 1 SD and minus 1 SD, and again this is supposed to be 1 SD. Short put is going to be minus 1 SD and short call is going to be plus 1 SD. So this will probably again 30 here, 29. Okay. Next, next. Start download, start analysis. So probably this should bring only minimal results. Okay. Okay. I think it's bringing the same thing. Okay, let me try to address this later. Let me check what is the issue with this strategy wizard. Something is there. It's not populating over here. Let me check it out anyways. So Bank Nifty is selecting all the criterias, but somehow it is not showing the strike price, expiration, everything. Let me try to fix it later. So at this point of time, let us leave this Nifty wizard, the wizard tool, and let me take a couple of other questions as well. Santosh is also conducting. No, I don't have any idea about. I know there is a guy. Is a guy named Santosh. He builds options oracle. Apart from that, I don't know anything about the author. Right. Okay. So to use PCR and volatility smile. Okay, let me come to the volatility smile. So volatility smile is nothing but we'll be monitoring the implied volatility. I'll go through the volatility figures and I'll explain what exactly it is. It is nothing but generally people don't want to purchase and go to the volatility smile. So this volatility smile, you can see a lot of data on the x-axis. On the x-axis is the strike price, on the y-axis is the volatility. The volatility is nothing but the implied volatility, and it shows for all the expiry series and it shows for all the strike prices as well. So now let me put a filter here. There is an option filter for this functionality is here. Let me click on that. Let me click on that and let me select only current month options, right? So near month options, and I'm just going to plot for everything. So this is only for the near month options, call and put. You can notice here, let me zoom a little bit. Let me zoom a little bit. Right, you can see here, if I go through the calls, you can see like it's something like a smile. It looks appears like a smile, a smiley, right? It's not typically, but that's what theory says. The theory says like the implied volatility curve looks like a smiley. So what we can do from this is you can understand which is having the low implied volatility here. If you are planning, let's say you are planning to go long, and generally people tend to go and buy some cheap option prices, right? There are strategies where if the implied volatility has to be very low so that it will not affect your trading strategy. And, in some cases, if you are going to pick a high volatility strategy, it may hurt your option positions, right? And in this case, let's say you want to buy low implied volatility. Low implied volatility means you're paying a fair price to the premium, and probably you're getting it cheaper. Yeah, and implied volatility at 80 means it will be overly priced, and you have to pay a very big fee to get that particular option strike price, right? Whereas here you can see that. Let me again zoom a little bit. You can see here the 8,400 all the at the money strike price plus and minus 100 200 price deviation. You can get an fair implied volatility, and the implied volatility, current implied volatility is somewhere around 15, means the implied volatility is very low, and implied volatility is highly correlated with VIX as well, India VIX. So if the India VIX increases, probably you can see the implied volatility also going high, and your premium goes up. And if the if the India VIX is going down, it has a very strong correlation, direct correlation with implied volatility is having a strong correlation with India VIX as well, right? So monitoring an India VIX is going to be an uh, uh, you have to keep monitoring India VIX parallelly if you are an option trader, right? That's what I want to say. Fine. So option this volatility smile is generally used to check whether the option premium which you are willing to pay is you're getting at the right price or not, or you are paying low premium, I mean low price to the option strike, or you are paying a high price because of the high implied volatility. Right? Because there are strategies like bear spread or bull spread kind of strategies, it requires the implied volatility has to be very less. Whereas if the implied volatility is going to be more, your profitability is going to come down ideally. So before trying to play with this strategy, people generally used to look into this volatility smile just to check whether the implied volatility across the strike price, how it is there, so that if the implied volatility is high or low, nothing much. Apart from that, it's not going to make any sense. All you can do is you can just monitor the positions across the strike price, right? Okay. So implied volatility is done, and let's get into volatility cone. Right? Let me open the volatility cone here. So volatility cone, again, let me filter the criteria only for the current month option series. It shows for all the option series, and okay. So here in the volatility cone, what you are seeing is you can see a mean one standard deviation line, plus and minus one standard deviation line, plus and minus two standard deviation lines. So all these lines are nothing but the annualized volatility. All these lines are calculated from the annualized volatility. Right? We are not going much detail into the calculation part, but all you need to understand is where is the with the given annualized volatility, it looks like a cone shape, right? With this volatility, there are 5 lines has been drawn: mean, one standard deviation plus and minus, two standard deviation plus and minus. So it looks like a cone shape. And let me zoom a little bit only to this. Okay, I cannot zoom here. Yeah, I can zoom. I'm able to zoom here, and you can at the bottom you can see what you can see is the business day to expiry. Since I had selected only the current month options, let me select the next month options as well, so that it gives a fair idea again. Let me select both current month and next month. Okay, so you can also see here the dot represents the magenta dots represents the puts, and the blue dot represents the calls. So you can try to understand whether you're paying your implied volatility. I mean, the y-axis represents the implied volatility, and the 5 lines represents the standard deviation and mean of the last it represents the annualized volatility, and the mean and the standard deviations are calculated. On top of it, we are plotting the puts and call implied volatility to check whether it is way above the historical volatility or not. If it is above historical volatility, then you can expect the volatility to come down probably. You can see there are a lot of strike prices which are way above the 2 standard deviation implied volatility. So you can expect for those particular strike prices, so which are there. For example, let me take an example here. So this particular strike price is let's say 7,800 put. 7,800 put is at the implied volatility is around 21.88, right? So one can expect the implied volatility to come down because it is above 2 standard deviation of the previous historical volatility. So now we can expect a mean reversion, and you can expect the implied volatility to come down from 21.88. You can expect the mean value is somewhere around 12.78, right? So you can expect mean reversion for this series if you are expecting an implied volatility to come down, and probably you can take a bet in charting those 7,800 put for this strike price for this current series, right? Whereas if the volatility is very high, or you can also see this particular the marked here. I selected an 7,450 put is at the very low. It is having ultra low volatility. The volatility is somewhere around what was the low? 9.50. 9.50 is the low for this particular strike. It means it is having ultra low volatility, and it is of 28th June series, 7,450. Means you can expect a mean reversion. If you're expecting mean reversion and you're expecting the uh, expecting 7450 to mean revert, and its implied volatility is going to get increased, and it is more probably mean reverted to the mean or even to the bands like the -1 deviation or -2 deviation. What you can expect is you can expect a mean reversion in the volatility figures, right? So you can it is fairly cheaper, and you can go and buy 7450 put. If your study says that this is the cheapest and you want to get some OTM puts, you are expecting some market crash next either this month or next month, you can go and get some 7450 puts, right? So because it's fairly cheaper, dead cheaper, and the implied volatility is very low with the given historical volatility figures. So that's what we can understand from the volatility cone. It named it volatility cone because the standard deviation bands and the mean bands are looking like a cone shaped figures. So again, on top of it, we are measuring the implied volatility, and that gives you a fair picture about whether the option is cheaper or the premium is very higher with the annualized volatility figures. I mean the historical annual volatility figures. So this is it, and apparently it also shows you the historical prices of the particular strike. So currently it is Nifty chart, right? So Nifty chart. This data is fetched from Yahoo Finance, and it gives you a fair idea where the market stands and what the volatility is trying to do. You can try to correlate all these figures, and you can try to come to some sort of conclusions, right? So this is it. The volatility cone is all about again trying to analyze analyzed volatility and implied volatility. Okay. So where is implied volatility coming from? Is it India VIX? So again, implied volatility is a complex formula. Uh, the implied volatility varies for each and every options. I mean, every option strike price, it varies. And is it from India VIX? No, there is no correlation between. I mean, there is no formula-wise correlation between implied volatility and India VIX, but the India VIX is but India VIX is proportional to implied volatility. How to plot and interpret smile curve, right? So I guess we had spoken about it. Once the data is downloaded, you can go to volatility smile. You can filter the criteria with option filter, and you can get the data, and now you can zoom the particular size, and you can get the volatility smile. And this implied volatility smile is generally to understand the implied volatility across different strike price, how the implied volatility is, whether the particular option price, it is fairly priced, cheaper or expensive, right? That sort of analysis it helps you to do. And can we calculate option pains here? Yes, this is a question from Padmavati. I'm sorry, Padmavati Jagdish. There is a way to calculate option pain as well. It calculates it automatically, right? So option pain, it is an again a concept. Option pain. I mean, in markets, it is believed that 90% of the people makes money by writing options, not by going naked options, right? So, so in order to calculate where is the maximum pain, so that most of the players are going to lose their money, right? So how you can understand the formula? It's quite a complicated formula, and let me try to explain here. Marketcalls, some time back I done this article on option pain. Option pain. So let me go through the calculation part, right? So one thing this option pane believes that markets can be manipulated. Market can be manipulated, and the manipulators want the option, the underlying price to expire at a particular zone where it causes maximum damage to the maximum number of players, right? And here, to compute the option pane, what you need is first we need to understand. First, we need to understand. First, we need to calculate. We have to get the call OI, put OI, and also the call call last traded price and the put last traded price. And you have to calculate the call value. Current call value is nothing but the call open interest into last traded price. Similarly, you have to get the put value for the current open interest for that particular strike price. Each and every strike price, you have to calculate the total call value and total put value, right? And on top of that, it has some more criteria. It believes that okay, this particular example taken around April. I think this article has been written around April. Maybe I can post you the link. Just go through it and try to explore on your own. It's quite complicated to explain with a given time frame. Probably we have another 15 minutes to complete this webinar. So I'll send it to everyone. You can go and analyze it. What option pane is all about. Let me cut short it here. Okay, so what we have done now, we had calculated the put value, call value, and put value. Now what we have to calculate is, let's say if 4,300 is the expiry, what happens to the calls? All the calls, the 4,300, 4,200, and 4,300 will become in the money, right? So all these strike price will become in the money. The rest of the option will expire worthless. That's what the option pane believes. Most of the 90% of the options expire worthless, right? And if 4,300 is going to be the expiry, then rest all the expiries, 4,400 call, 4,500 call, 4,600 call expires worthless. Means now I have to calculate the cumulative. Figures of the in the money strike calls, which is going to be there. These are the players who are going to survive, in the money players. The other players, because of the time value goes to zero, the call value gets eroded, and all the premium gets zero, and all these numbers here, the call value goes to zero, all these values goes to zero, right? And only the in the money players will be holding with the option premiums, and rest are all the thing which goes to zero because the call writer stands on top of it, and that is where the maximum pain is going to cost. And likewise, we'll be calculating for the put value as well. So it is the reverse one, and we have to calculate the cumulative values. So these numbers represents the cumulative value. So means if the option expires at 4,200, the option total call value left in the system will be only this amount. And what option pane believes it plots both the call value and the put value, and finally it computes the total value as well. So total value is calculated. So this is on top of the cumulative call value and the cumulative put value, and finally the total value is calculated, and it is plotted across the different strike price. And you can see a minima over here somewhere around 8,100 is where the total value is very minimum. Means that is where the option pane is where all about right now. So maybe we can expect an option expiry around 8,100 or 200 zone, or this is the zone, and the option pane values are again going to be very dynamic. It changes when the market is going to change. but most likely the people will be watching option pain during last 3-4 days of expiry. If you are going to see a minimum number of around 8,100, you can expect an expiry around somewhere around 8,100 or 8,150 in that range, right? So it gives you fair idea about where the market is going to expire. Again, it's a theory, right? Nothing is practical. If you want to test it out, you have to go and test how it behaved in the past, how it is behaved in the present. But it's just a theory. It says like market is more likely to expire around 8,100 because option pain is there, very minimal there, because and more likely that is where the in the money strike price of both calls and puts are going to be very minimal. Rest everything is going to be zero, right? So when the market is going to expire around 8,100, most of the strike price are going to go to zero, and the rest of the in the money prices are going to have a very fair value. That's what the concept is all about. I guess you people would have been able to understand to some extent, but it's a calculation. To do the calculation part, you have to understand how it has been calculated. I had done the, I had explained the calculation part, how it is done with some scenarios. So you can go through that, right? And let me open the option chain in here. Okay, so let me take a couple of other questions. Take other questions. Okay, I guess Padmavati Jagdish, your question has been answered. So again, there is a question from Saurabh. Should they? Why is the theta value above 100? Is it supposed to be in negatives? Where have you seen that theta value is negative 100? So theta value, let me check what is the maximum theta value we have. Theta value is negative here. I don't know where you had seen the theta value is. Right. So if you understand theta value means the theta value is minus 0.323, means if the price option price is not changed, and when the every day every day passes, right, you will be losing 0.3 in the premium at this point of time. That's what it says, right? So the theta is minus 0.3. Theta will be generally in negative numbers because it represents when the day is passing, how much you will get eroded when the premium is going to remain same. I mean, when the underlying stock is going to remain same, and what decay you are going to get when there is no change in the underlying stock price, when there is no change in delta or gamma, whatever it is, right? And when one day passes, what erosion you can get it, like right now you're getting is minus 0.3, means the last traded price. What is the last traded price? Is 4.4 here in case of 6,800 strike, and when one day passes, you'll be losing 0.3 in your premium. Means if everything remains same, and you will be losing, your premium will be go to 4.1, around 4.1. That's what it means. And theta generally it goes to 0 during the expiry. Okay. Can we check change in OI? This is a question from Muthu Selvan. But anyways, you cannot track the change in OI. To do that, I had created an tool here in my website, marketcalls.in. You can go to tools and you can go to OI tracker. OI tracker. Currently, you can track the change in open interest during live markets for both Nifty and Bank Nifty. You can track the open interest across various strike price. Only this represents only for the current strike price. And also you can also track the change in open interest sentiment, right? So you can also track the change in open interest sentiment here. This you can do it for both Nifty and Bank Nifty as well. You can do only for both Nifty and Bank Nifty as well. At this point of time, we enabled the Nifty and Bank Nifty, whereas in the future we have plans to add stocks as well. So you can monitor the monitor the open interest and change in open interest across various strike price only for the current month expiry contracts. Right? This you can get it from tools. You can go to OI tracker, right? Anyways, I guess that answers your question, Mr. Muthu Selvan. Okay. Volatility, smile and cone, we are done with that. Option Oracle allows to write a strategy combining options and futures. Couple power, you cannot, at this point of time, option strategy doesn't support futures. If you want to do that, you have to customize Option Oracle according to your need. And anyways, the code is open source as I explained. But instead of futures, you can write a strategy on top of the underlying strike price. Like that means the spot price, right? Futures at this point of time it is not supporting it, and at this point of time it supports only options and spot prices. So you can use the spot price as a proxy to futures, and you can build a strategy on top of it if you want to do something like a covered call or something like that. You can do using options and spot prices, right? Because you can go to the options and you can, if I try to add an row, there is an option to go for a long stock or a short stock. This basically represents, it takes the data from the underlying strike price values, right? So you can see here, let me put 75 here, and I can see it takes the 8170 rate, which is nothing but the underlying spot price. Okay, there is another question from Uttam. He asks, can we do any automatic profitable option trading software which can guide us the good opportunity? Option strategy depends on market moves with volatility changes. I guess it's already available in the market. It's some guys from, I think, from Fin Ideas, quite costlier, but I think they had already done it. I mean, Fin Ideas, they have some products on options, like they have a tool called Wall Hedge, and they have some, they are already running some sort of an option automations kind of stuff, right? So you can go through that. They have a lot of option products. Right. Apart from this, I don't see any other Indian guys. I think some Greek soft from institutional level. Greek soft, I heard they are into building a lot of black box stuff for option traders, especially for the institutions. These guys build. I mean, they are like Omnisys kind of guys. They build OMS front and back end kind of guys. More of an institutional solution. And yes, Uttam. You can check with these guys if you want to do any automation on options, the Greeksoft and the Fin Ideas. So they generally used to do some automation efforts at this point of time in Indian markets. And again, you have to explore with Symphony FinTech. You can also Symphony FinTech. If you want to write any rules, Symphony FinTech. So Symphony FinTech is an algo trading platform provider for Indian markets. So they have a couple of products. So you have to check with these guys whether it matches with your criteria or not. So three options: Symphony FinTech, Greeksoft, and Fin Ideas. So these are the guys currently engaging in option automation kind of stuff. If you know any guys, you can let me know. But so far, I know these guys does some automation efforts, and some people are involved in options. Some people are involved in automation, and some people are involved in both. Right? Okay. I guess that answers your question, Uttam. You can do automation, but ready-made tools are not available. Probably you have to do a lot of customization. Probably, I mean, you can check with Fin Ideas guys. Fin Ideas guys have some ready-made tools. But if you have a very specific customization, you may have to contact Greeksoft or Symphony FinTech. How do you get the pre-configured strategies in the drop-down? Okay, so pre-configured strategies, you can get it either by saving the template. You can get a template. You can save your strategy as a template. Let's say you can, let's say you want to put an short straddle, right? So short straddle. Okay, it's not selecting anyways. Okay, short straddle, you get a predefined values. Or let me say like I want to put an iron condor, right? I don't know what iron condor has. So iron condor. I don't think they have iron condor here. Okay, let me try with long butterfly then. Okay, long iron condor is here. So long iron condor, select it and then click on select. It gives some standard template. So it's a 4-leg option strategies. And now what you can do is you can go to the graph and try to analyze the payoff, right? So generally you can try to play this iron condor. Probably it looks like you can play this game during expiry, right? So where you can get some maximum profitability. Almost. What is the profitability? Oh, 266%. I don't know. Anyways, you have to check it out. Okay, so by template, we can get the automatic stuff. You have a lot of default strategies aligned over here, and you can also build an synthetic futures. Let me check synthetic futures is covered or not. Synthetic long stock. Okay. So synthetic long stock is nothing but creating a futures from the options. By using the options, let's say you want to build a future, what you can do, you can long 8,150 call and you can short the same strike price. What happens, your delta will, your net total delta will become zero. Ideally it becomes zero, I mean, but theoretically it has to become zero, but because a long call will have a positive delta and a short put will have a negative delta, so it negatively, I mean, it adds up. Sorry, I mean, long call will have a positive delta and again short put will have a positive delta. If your total delta is 1, means for every 1 point movement in Nifty, you will get a 1 point movement in your total premium collected. So you can see here the total premium now adds up to 1. So means what it means exactly, you are building an futures. So your payoff graph looks like a straight line, means it's like an alternative to trading the futures, right? So instead of taking a futures, you can take a long call and a short put, and ideally your brokerage comes down. And so instead of playing in futures, you can play with the same future game in options as well. So every 100-point movement, you will get same 7,500 rupees upside and same losses. And simply you can construct an futures from the options. So this, so instead it's called as an synthetic futures. Let me go with a different strike price as well. Let me say like I'm going to take a 8,200 long call and 8,200 short put. So what is the total delta? Again, you can see that the total delta adds up to 1, and the payoff graph remains same. So it's easy to create an synthetic futures. So this is synthetic long futures. If you want to short the futures, then you have to reverse the game. You have to take a short call and then long put. Okay, so now what happens? Now again, the net delta becomes 1. Shorting the call means your minus zero point 0.6 delta become positive delta, so it is 0.46 again. I mean, your net delta becomes -1 here. That's what I want to say. Your net delta becomes -1 and your payoff graph is something like this. If the market goes down, you'll be making money. I mean, I'm saying wrong. Yeah, if the market goes down, you'll be making money, and if the market is keep on going up, let's say 8,500, you'll be keep on making losses if the market goes up, right? So this is how the synthetic futures are created for both synthetic long futures and synthetic short futures, and that way you can save brokerages. Anyways, you can take your brokerage calculator and you can start working out how much you will save when you are trying to play with calls and puts, because your turnover comes down, and when the turnover comes down, probably your brokerages, your transaction commissions, everything comes down, right? Great. Let me move forward again. Okay, so what is the question? let me take some more questions here. Let me take some more questions. Okay. Wow, a lot of questions. Okay, let me do a short video on how Wizard works. Okay, so let me spend some time on that. I have to check whether any bug is there or with that or not. And so if the audio connection is getting lost, then probably I request you to join again so that some people might be experiencing slow internet connection. Because of that, we may face some audio quality issue. Right? And there is a question from Anil Biani. Question is like, apart from open interest, can we have a filter on volume trade on each strike? In I guess in Visa there is no volume filter as such. Yes, there is an option. Oh, I think there is a filter here. In Visa there was a filter here to filter volumes probably. Let me check whether it is a volume or an open interest based filter. So this is okay. This is an open interest based filter. They also have filter on contracts and results, maximum result per stock. Okay, they have no filter based upon volumes, I guess, probably. Probably they don't have filters on volume. Maybe you have to select it manually after getting those strike price. You have to look into the volume figures and you have to filter out manually. Okay, and I don't see any strategies under templates. So I guess couple power, the template, we can see the strategies here. We can see a bunch of strategies here, a lot of strategies listed out here, right? And select any of the strategy and click on select. Automatically it comes to the strategy position window. Okay. Is this webinar recorded? Yes, the webinar is recorded. Okay. Strategy summary explanation. Strategy summary explanation, it talks about where is your break-even price, what is your total investment, how much premium you had collected if you are short selling it, and what returns you can expect, right? What is the maximum loss potential? In some cases, it's theoretically infinite, right? So it tells you if it is theoretically infinite, this strategy summary will tell you whether it is theoretically infinite or not, right? And it also tracks the your break-even price as well, break-even price on the top as well as on the bottom. What if there is no change in the underlying stock price? If the market is going to expire at 8170, how much return you can expect, right? And what is your upper protection? And what is your current return? This is what the strategy track is just explaining, and it's nothing but your profitability table, and it gives you an overview about your strategy. Whereas if you want to get some more finer details, you have to look into the payoff graph. You have to look into the your implied volatility, current implied volatility figures, and you also have to look into the analysis table, like how we discussed. How what if the Nifty expires at various strike price? You will get a lot of scenarios. Okay, so there's a question from Saurabh Sri Shuddhe. 8,100 long. So a lot of option strike prices are there. This strategy shows a straight line payoff graph. What does that mean? So the straight line means, I mean, it says like, I mean, it is an let's say again, let me go to that synthetic options, right? So let me delete this row and let me put an 8,100 call and put, I'm going to short, right? I'm going to short, that way I'm just creating a synthetic futures because I can create a synthetic futures with a total delta of 1. And let me go to the graph. It shows a straight line, right? So this is a payoff graph of the futures generally, right? So every 1 point movement you will be getting an you'll be in profit. This is a long synthetic futures. I mean synthetic long means every 1 point you will get a 1 point total premium on the upper side. Means you will be getting an total 75 points for every 1 point upside movement in Nifty, and every 1 point downside movement in Nifty you will get an loss of 75 rupees. That is 1 point Nifty loss of equivalent loss of 1 point Nifty. So thereby you can create an you can create an long futures. Instead of buying futures directly, you can also construct futures using options. That's what I want to mean. So that's why the payoff graph is looking straight line, because it's a payoff graph of long futures. Okay, so again questions. Okay, my internet connection is slow. Anyways, you can watch the recorded webinar, Mr. Pawan. Shows a straight line in profits. Okay, maybe you're talking about the iron condor stuff. Let me go to the iron condor again. Iron condor. Let me go to the long iron condor, right? Let me go to the long iron condor. Select it, and the payoff graph. It looks like a straight line. So what does this means? You can see a lot of straight lines here. That's what the question from Saurav is. What does this means is your loss is protected. Let me zoom a little bit, right? So in iron condor, your loss is limited. You don't get unlimited losses, even though if the market crashes either side, right? You're getting, your profitability is protected. You can see here that this is where the maximum profitability you will get it. What is the strike price? Till how, where you are protected, you will be getting a maximum profitability when Nifty expires between 8,100 to 8,200. This is where you get a maximum profitability. Anywhere if the market expires between 8,100 to 8,200, even if it expires at 8,101, you're going to get a maximum benefit, right? And if the Nifty is going to expire below, let's say there is a break-even point here. This is a lower break-even point, which tells you like if Nifty is going to expire below 8063, you're going to get some losses, and if your expiry is going to be above 8237, you're going to get some losses. But if your maximum losses is going to be if Nifty is going to expire anywhere above, even if market is going to shoot some 20% upside immediately, or going to crash 20% immediately, your losses are protected in this case. So your losses are going to be how much? Minus 13. What does that minus 13 means? So means I have to select the total quantity here. Put the total quantity as 75 here. 75, 75, 75, and again 75. Okay. Now we will get the actual payoff graph. Okay. So how much is my losses now? Probably my losses will be 1,000 rupees. 1,000 rupees wherever the Nifty is going to close. So, and my profitability is going to be around, if Nifty is going to expire around 8,200, 8,100 to 8,200, my maximum profitability is 2,726. So your risk reward is 1:2.7, right? So your losses is only 1,000 rupees wherever Nifty is going to close in that range. Whereas if the profitability, you will get a maximum profitability if Nifty expires around 8,200 to 8,200. So this is how you can read a payoff graph. Okay. My template is blank. Any settings to be changed? Probably you try to download the other version of. There are two versions, as I said. So one is the slow version, another one is the faster version. Maybe if you would have downloaded the faster version, you try with the slower version. Or you tried with slow version, I request you to download with the faster version, because if something is not working, you try with the other thing. In my case, the faster version is not working in the Windows 10, so I prefer the slower version, and it is working good. Right. So I guess that answers your question, Mr. Vijay, and Saurav as well. Your question has been answered. So again, Ritesh Tong, please send the recorded version of the webinar. The recorded version of the webinar will be posted by evening around 5 o'clock in my blog. So you can log into So you can go to marketcalls.in. So you can watch it out, marketcalls.in, right? And again, there is a small announcement here to all the participants of this webinar. So you'll be getting an free some 20% promo codes for our upcoming event on TradeZilla. This TradeZilla event talks predominantly on three concepts. One is AMI Broker. It's a virtual classroom where it starts between it starts right from July 2nd to till the end of 30th July, and this predominantly focus on AMI broker trading system principles, option analysis. A lot of option analysis will be covered, and we also, the main focus will be here on market profile, right? So the market profile is where we'll be running an trading room as well, where the learning happens live, right? And we also have a Slack chat here where the conversation takes place live during the market hours. So Slack is an application similar to your WhatsApp and Telegram, and here the Slack has a lot of inbuilt features here, right? So we have a lot of categories here to talk about AMI broker kind of stuff, and option trading, market profile kind of stuff. A lot of things will be discussed during market hours, and all the TradeZilla participants will be having access to the TradeZilla the trading room, as well as to the Slack chat, where it's our virtual classroom where all our learning happens live during market hours as well as on the weekends. The weekends we will be having a lot of webinars. Almost we have plans to have 15 webinars, and all the webinars will be recorded live, and will be provided 6 months of access to the recorded webinars, right? You'll be having access to the live trading room, and the Slack is forever. You'll be having the relationship is long term, and the Slack room runs forever. And right now we have almost 120 traders are there in the room participating. All are our TradeZilla and our Divergence participants so far. And you also have access to, we'll be doing a lot of live case studies, live experience. A lot of fellow traders will be sharing their ideas, how to approach the markets, how not to approach it. So all those things will be discussed here in the trading room, and you can go through the agenda over here. You can go through the agenda. It's a brief agenda. We want to keep it as an intensive session, because we know that markets are complex and it cannot be learned in a day or two. So it's a complete 30 days of session, happens live, virtually we meet, we discuss about markets, we discuss about concepts, we discuss about the complexity of the markets. So that is the highlight of the thing where you cannot get anywhere in any other educational programs, right? Again, I'll be sending you mails in brief about it. So I guess we had came to the end. If you have any questions, you can answer your questions, and so there is a question from Sandeep. I have registered for TradeZilla of July. Also attended your webinar of market profile. Registered GOMI by bypassing $100 for market profile indicator order flow, but I'm not able to get that. Sandeep will be having a session during our TradeZilla, where we'll be talking about how to configure your own the GOMI ladders or market profile indicators, right? In case if you're not able to configure market profile indicator, you can connect with our customer support team. They'll be able to help you out. So I guess that answers your question, Mr. Sandeep. My customer support team number, you can note it down. It's there in our portal, marketcalls.in/premium. You can get it right from here. So you can access the customer support team number over here, right? It's highlighted over here, right? I guess I requested you to call right now. Probably my team will be helping you right now. If they are not able to solve it, I'll step in and I'll try to solve it, right? Could you please post a weekly chart of market profile on your market calls? So we'll be talking about the market calls as well regularly. I had done a couple of tutorials, and we'll be trying to post. We'll try to keep the postings of daily and weekly profile frequently. But if you want to access it during live market hours, you can access marketcalls.in/mp. There you will get the live market profile charts, which updates every 5 minutes. Right? So I guess we came to the end. If you have any questions, you can ask me in Twitter, or you can mail me. My Twitter handle is marketcalls underscore, right? So marketcalls underscore. You can, if you want to ask any questions or you want to follow me in live markets, you can follow me over here. I'll be active in Slack as well as in Twitter, right? So thanks everyone. Thanks for your time and spending your precious time with us. Thank you again.